What's going on, apes and apettes? Welcome back to the channel. You are of the 1% and you do what the 99% will not do. That is why you are here watching this video, because you are trying to grow your financial destinies. You're trying to expand and build your knowledge base. So that is all fine. That is all good. Thank you guys for watching this video and tuning in here today. We are setting up for a very jam-packed, action-full 4 days of trading for this week. So I hope you guys enjoyed your extended holiday. This is going to get a little bit crazy, and we do have some breaking news to go over here in this video, as well as everything AMC that you do need to know. So do me a quick favor. It costs you free 99. It costs you nothing to hit that like button and comment down below if you guys find value out of the video. Hit the subscribe button, but that is never necessary. Let's dive straight into this video. So first and foremost, right off the bat, guys, it is very important to know that China did cut two key rates to support their slowing economy. China's central bank on Monday cut two key interest rates that would likely translate into lower benchmark lending rates in a bid to provide more support for the slowing economy. The People's Bank of China lowered rates on the 1 year medium-term lending facility and 7-day reverse repurchase agreements by 10 basis points each, according to a financial statement. The MILF, the MLF, no pun intended, interest rate, which is used to price China's benchmark loan prime rate, was cut to 2.85%, while the reverse repo rate was lowered to 2.1%, the PBOC said. Now, keep in mind, when countries are dropping rates, that is a sign of something is to come and things are not right in the economy, which in this case is going to be slower growth. And the reason they do this is to encourage more spending. Obviously, that's why central banks keep rates low. That's also how I made a ton of money during the crash of 2020, playing the 20-year treasury bonds known as TLT on the index. Now, why I am so excited about this is because this is another very large domino that is falling in our favor. We're likely to have a negative response in the American markets due to this, and that will help to restrict the liquidity, something that we have talked about many times, which is the number one component of the MOAS. If there is too much money outstanding, it does not matter if AMC goes to $2,000 or $5,000 or $10,000 per share. Shorts would not be forced to cover by and large, and you would not see the MOAS, just like we haven't ever seen a short squeeze yet with AMC stock. But why this is really so key and how this translates into investors in America being a little bit more fearful and selling off a little bit more stocks is because China was the first country to get COVID, whatever you want to call it, COVID, Rona, pandemic, whatever. You guys get what I'm saying. First country to get that, first country to get rid of that, and they've been in a recovery phase for about 6 months to 1 year now, and they're seeing their economy slowing down. Investors are going to say, hey, if this is happening in China, could this start happening in America? We should get a little bit more safety in our portfolios and start to hedge out a little bit more. So short-term pain could be expected for AMC, but long-term gains come with short-term pain. Keep that in mind. That's a signature quote of mine I just created. That's a very good one. Now, as far as the actual chart for the MILF rate, the MILF rate in China, this is the max chart. This is how long they've had these rates. Back here in, I believe this would translate into like early 2000s. It does not say an exact date, and it really doesn't matter for the sake of this video. But point is, they kept these at about 3.3% for about 2 years between 2018 and the beginning of 2020, and then they did cut them all the way down to where we are currently at 2.85%, kept them here for about 20 months, and now they're dropping them again. And whether they raise or drop them, they tend to do this in intervals of 2. So I do expect another one to come, and that's obviously going to hurt the markets even more here in America and send us a big red flag that our economy may start to slow down as well. Another very weird headline is that the Chinese economy actually did grow by 8.1% in 2021. It was expected to grow at 8.4%. So missing right there as well. And also retail sales missed expectations, growing by 1.7% in December from a year ago. Analysts polled by Reuters had predicted a 3.7% increase. So all of this is not good for China, and it's definitely pointing to some pain that is to come in the Chinese markets as well as the American markets. So that is the scoop on that. As far as actually what to expect in American markets, all eyes are going to be on company earnings. And this quarter is very important because a lot of companies, it's not required, but a lot of companies give your full year guidance in the first quarter. So they'll say, hey, we expect to make X amount of money, X amount of profits by the end of the year. And investors, they're going to have to do a lot of pricing in based off of the guidance that is issued, because my running theory is that the second half of 2022, you're going to see a slowdown because there is less stimulus, and the people that get money in really fast and spend that money are not getting money in as fast. They're not getting stimulus checks, unemployment insurance. They're going to have to start paying back student loans. They're not getting the child tax credit. So after basically tax returns go out to people, you're not really going to see any exposable money left that is coming in every single week or month. So that's going to be very important and play into this whole earnings situation. We do have, of the notable names, Goldman Sachs, Bank of America reporting alongside Procter & Gamble, Netflix, and many transport names. So that's going to be very, very key. But the biggest thing to know is that we do have the Federal Reserve meeting that does begin January 25th. That is not next week, but that is the week after, or it's not this week because today is technically Monday. It's not this week. It's going to be the next week. But coming to about Thursday and Friday, you might start to see some weird drops or even weird pops in the markets, in the indexes or in individual stocks, as investors try to price in what the Fed is actually going to say. And the Fed might just acknowledge what is going on in China if they do get questions on that, because the Fed meeting, like it says right here, the 26th and the 27th, the actual press conference is going to be the 27th. And that's when analysts from different banks or wherever they come from, news outlets, they ask Fed Jerome Powell questions. And that's really going to be the thing that moves the markets. And it wouldn't surprise me if he gets asked questions about what is going on in China, because this is big news. This is very, very, very substantial news. I think this is the biggest news that we have gotten in months. Forget Evergrande. If you thought Evergrande scared the markets, this is definitely going to scare the markets. And I would watch out. Possibly there's a trade here to play the downside of Chinese companies, but I would be very weary about those at the current moment. Now let's switch gears. Let's get into what is going on with AMC and what to expect next week. This is not going to be the actual price prediction video. That will come out later today, and that's going to be very key. We'll go over the thesis and what's going to play into how AMC is going to move in that video. I don't want to make this video super long though, so we'll just give you guys the basics right now. So we're looking at 19.26% short interest of free float, about 99 million shares that are sold short. We know these numbers are fugazi. They don't really mean anything. The cost to borrow minimum 0.51%, cost to borrow max at almost 2%. This cost to borrow max is going up a little bit as the stock is going down, so that is interesting, but we need this cost to borrow to go much higher to about 10% before we start to see the borrowing cost of these short positions start to really affect the length of holding time these hedge funds can hold on to their positions. 47, and the average days out on loan is now at 76 days out on loan. So this is almost approaching an all-time. Actually, is this an all-time high? We are about 1 or 2 days off of our all-time high for this as well. So shorts that have taken out short positions are probably averaged in the range of $40 to $43 per share is when they took on their short position. So once the stock does start to go up, these shorts are going to be very much inclined to actually to cover on their short positions. So all of this looking very good, but the option activity, keep in mind that Fed meeting is not next week, but by Thursday and Friday, you might start to see some very weird volatile moves at the beginning of trading and the end of trading, but specifically the end of trading on Thursday and Friday are going to be very, very important and are going to give you a glimpse into what potentially could happen that following week. As far as the actual numbers for this Friday, we do have about 87,000 calls that are in the money, 230,000 calls that are out of the money. That's pretty much pretty close to my expectation of about 700,000 calls that would be out of the money by the time this week did roll around. So we do have a very large chance of actually seeing a gamma squeeze if we can start to make our way to the upside. Keep in mind, a lot of the open interest is actually held at the 145 strike as well as the $40 strike. We have about 65,000 for open interest at the $40 strike. So if we do start to see a move to the upside, the market makers, they're not going to want to take any risk of those contracts going into the money before they do start hedging. So I do think they would start to hedge sooner, maybe in the low 30s or even the high 30s, but before the contracts actually did go into the money. So keep that in mind. It's going to be very volatile either way, as we do know these large expiration dates always are. So keep that in mind. As far as the puts, we do have about 115,000 puts that are in the money and 280,000 puts that are out of the money. If we do start to see the price of the stock going up, you're going to see a lot of that double buying power head into the stock, where the puts run from into the money, out of the money. So you see market makers de-hedge and buy stock to de-hedge their hedged put positions. Hopefully that makes some sense to you guys. And you'll also see the calls start to go into the money. So that is two forms of buying power on the option chain, on the de-hedging side of the put option chain, but also on the hedging side of the call option chain. So let me know if that made sense to you guys down below in the comment sections. I will do my best to actually make a full video on that if it does not make sense, because that is going to be very important, as well as what is going to happen with the actual stock. I think it's going to be a somewhat muted week. I think we are at the mercy of the market makers until volume does actually come back into the stock. But we will go over a deep look at the technical analysis, because that is only scratching the surface, and it could get very interesting. I want to go over some scenarios with you guys. If we do see this happen, this will happen with the price. Or if we see this happen, you know, the markets take a move to the upside or the downside, this will happen with AMC. I want to make that very clear to you guys in the video later on today. So make sure you guys stay tuned for that. Be ready to go once that video does come out. And then obviously, if you guys want me to answer any questions about real estate, rental properties, real estate agent, investing, stocks, trades, all of that, I do it all. Have rental properties, real estate agent, all of that. So bring your questions later on tonight about 10 p.m. to 11 p.m. that Eastern Standard Time. That's when we do those live streams. So love and appreciate you guys. Thank you for watching. I will see you in the next one.